very good morning to our RANsquawk listeners. Hope you all had a great evening. A couple of things that we've seen so far here in the European session, with a broader higher equity market and lower fixed income futures, is a tension toward the fiscal compact agreement we've seen most recently from these latest European officials and meetings which have been conducted over the last few days. That was commented on from Sarkozy, who has been pleased with the progression in those developments. Elsewhere as well, the front page of London's FT wrote that in terms of the forthcoming next 3-year LTRO from the ECB, which is to be held on the 29th of February, could see a take-up up to and in excess potentially of €1 trillion, so more than double that of which we saw on their first 3-year offering. As such, that has lifted the short end in Euribor, and particularly since the European Open. Elsewhere, another article, European-based this time from Germany, the FT Deutschland, has been noted by a couple of desks. Their headline story, although not particularly new, did indicate the potential for coordination of the EFSF, ESM and the IMF fund to have a potential firewall in Europe up to a tune of around €1.5 trillion, has also weighed somewhat on fixed income futures, particularly the Bund this morning. Looking forward then in terms of the rest of the session, a couple of key indicators coming out of the US in what will be a fairly busy schedule with US corporate earnings still to come, such as Pfizer, just to name one of the bigger, larger cap companies. We'll look out for the Chicago PMI and also the consumer confidence readings for January, both of which are expecting to make improvements on their December reading. That pretty much concludes the opening wrap from me here in London, so for the time being, have a great trading day.